We can all agree that inflation is a threat to building wealth. It is a silent wealth killer. It can eat away your wealth over time, making your money less worth in the future than it's today. Inflation is the rate at which the general level of prices for goods and services is increasing, and it can erode the purchasing power of your money over time. If the rate of inflation is higher than the rate of return on your investments, then your wealth will be eaten away. This means that your money will be worth less in the future, and you may not be able to afford the same goods and services that you can today with that money. For example, let's say a cup of coffee costs rupees 50 in the year 2020, but due to inflation, its price increases to rupees 60 in the year 2023. This means that in 2023, you would need to pay 20% more to buy the same cup of coffee that cost rupees 50 in 2020. This increase in the price of goods and services is a result of inflation and can have a significant impact on your purchasing power and the value of your savings over time. So it is important to invest in assets that can beat inflation to preserve your purchasing power and grow your wealth over time. By doing so, you can secure your financial future and achieve your long-term financial goals. Beating inflation is easy with the right investments. That's why in this video, we are going to talk about 7 investments that can help you beat inflation. With that said, let's get started. Welcome to Smart Investing, where we talk about all things related to personal finance and investing. 1. Gold. Gold has long been considered a reliable hedge against inflation. Gold has historically held its value over time and can even appreciate in value, making it a good option to beat inflation. When the value of currency declines due to inflation, the price of gold tends to rise. This is because gold has a finite supply, and its value is largely based on its scarcity. As the currency loses value, investors often turn to gold as a way to preserve their wealth. Additionally, gold is seen as a safe haven asset that is not tied to any particular country or government, making it a popular choice for those seeking to protect their assets during times of economic uncertainty. One can invest in physical gold or through gold ETF. If you're from India, then sovereign gold bonds are great options for investing in gold, as it saves you the making charges and the risks and costs of storing your gold. Plus, the investors are assured of the market value of gold at the time of maturity by RBI, and investors also receive interest every 6 months, which is 2.5% per annum at the time of making this video. 2. Real estate. Real estate has long been considered an effective tool to beat inflation. When inflation occurs, the cost of goods and services increases, including the cost of real estate. As a result, the value of real estate tends to rise along with inflation, which can benefit investors who hold onto their properties. Additionally, real estate provides an opportunity for investors to generate passive income through rent, which can also increase over time as inflation occurs. Moreover, owning real estate provides a tangible asset that can serve as a store of value, unlike stocks or bonds that can be more volatile. As a result, real estate can be a useful tool for investors looking to beat inflation and diversify their portfolios. It is important to note that real estate investments require careful consideration and management, as they come with their own set of risks and challenges. However, investing in real estate requires huge capital, leaving many investors left behind. Therefore, you can consider a real estate investment trusts, where you can invest in income-generating real estate properties with a very small amount. REITs also pay 90% of their income to shareholders as a form of dividends, so you can start earning rental income from day one and also benefit from capital appreciation on the properties. 3. Commodities. Commodities are physical goods that are often used in everyday life, like oil, natural gas, and wheat. Now you might be wondering how investing in commodities can protect your investments from inflation. Well, during periods of inflation, the prices of goods and services tend to rise. This means that the value of your money decreases over time. But with commodities, they tend to hold their value because they are limited in supply. For example, if there's a shortage of oil, the price of oil will rise because there's not enough of it to meet the demand. This can make investing in commodities a good hedge against inflation. The best way to invest in commodities is through commodity ETF and mutual funds. Of course, like any investment, there are risks involved with investing in commodities. Prices can be volatile and can fluctuate based on things like changes in supply and demand, geopolitical events, and weather patterns. But if you're looking for an investment option that can help protect your money from inflation, commodities can be a good option to consider. Just remember to do your research and invest in a diversified portfolio to help manage risks. 4. Stocks. Stocks have historically been a strong option for investors looking to beat inflation. During periods of inflation, the prices of goods and services tend to rise. This means that the value of your money decreases over time. However, if you invest in stocks, you have the potential to earn a return on your investment that is higher than the rate of inflation. This is because companies can increase their prices and profits during periods of inflation, which can lead to higher stock prices and potentially higher returns for investors. Additionally, many companies pay dividends, which can provide a steady stream of income for investors and help offset the effects of inflation. Another advantage of investing in stocks is their liquidity. They can be easily bought and sold, providing investors with flexibility in their investment strategy. However, it is important to note that investing in stocks also comes with risks, as the value of stocks can be affected by various factors, such as market conditions, company performance, and global events. Therefore, as we always emphasize, it is crucial for investors to conduct proper research, diversify their portfolios, and have a long-term investment plan to minimize risks and maximize potential returns. One great way to invest in the stock market is investing in an index like S&P 500 and Nifty 50. It will minimize your risk of losing money. The stock market has historically given a 10% annual return. Although no one can predict future market trends, but if you just stick with index investing, then you can easily benefit from that. 5. Bonds. While the value of money declines during inflation, bonds offer a fixed rate of return that can help preserve an investor's purchasing power. Additionally, as interest rates rise in response to inflation, the value of bonds tends to increase. Bonds are issued by governments and corporations to raise funds, and they pay a fixed interest rate to investors who hold them until maturity. As a result, bonds can provide a reliable source of income for investors, particularly those who are risk-averse. However, it is important to note that bonds are subject to various risks, including credit risk, inflation risk, and interest rate risk. As a result, investors must carefully consider the risks and benefits of bonds. Always check the ratings of bonds and consider high-rating bonds to keep your principal amount safe. Overall, while bonds may not offer the potential for significant capital gains, they can be a valuable tool for investors looking to beat inflation and preserve their wealth over time. 6. Cryptocurrencies. If you are new to cryptocurrencies are digital or virtual currencies that use cryptography to secure transactions and control the creation of new units. The most well-known cryptocurrencies are Bitcoin and Ethereum. Now you might be wondering how they can help protect your investments from inflation. One of the reasons why some investors choose to invest in cryptocurrencies is because they are decentralized. This means that they are not controlled by any government or financial institution. As a result, cryptocurrencies are not subject to the same inflationary pressures as fiat currencies, which are issued by governments and can be affected by government policies. In addition, cryptocurrencies have a limited supply, which can make them a good hedge against inflation. This means that the value of cryptocurrencies may increase as the purchasing power of fiat currencies decreases during periods of inflation. It's important to note that cryptocurrencies can be highly volatile and their prices can fluctuate rapidly. This means that there is a higher risk involved in investing in cryptocurrencies compared to other investments. It's important to do your research and understand the risks before investing in cryptocurrencies. 7. Art and collectibles. Art and collectibles, such as paintings, sculptures, antique furniture, or rare coins, can be unique investments that hold value over time. They are often considered tangible assets that can be enjoyed and appreciated for their aesthetic qualities, but also have the potential to appreciate in value. One reason why art and collectibles may be a good investment during periods of inflation is that they are often not subject to the same market forces as other investments. They are unique and scarce, which can make them more valuable to collectors over time. Additionally, as the cost of living increases, the demand for luxury items like fine art or rare collectibles may also increase, driving up their value. However, investing in art and collectibles requires a deep understanding of the market and the ability to identify items that are likely to increase in value over time. In addition, there are risks involved with damage, theft, or loss of the item, as well as the potential for fraud or forgeries in the art market, so be careful while investing in them. That concludes our discussion on 7 investments to beat inflation. We hope that you found this video informative and helpful in identifying potential investment options that can help you protect your wealth from the effects of inflation. Remember, while there are various investment strategies available, it's important to do your own research and understand the risks and costs involved before making any investment decisions. We wish you the best of luck in your investing journey and hope to see you in our future videos. Thank you for watching, and don't forget to like and subscribe for more great content.